please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Midcap Radar. It's a market which is quite volatile. Frontliners are doing well, but Midcap's under pressure. I'm Sonia, and today with me, anchoring the show for the next half hour is Anisha. Hi, Anisha.
Hi, Sonia. Thank you so much for that. Yes, the Bank Nifty is powering ahead, but the Midcaps are coming under a bit of pressure. But actually, I think it's also the global cheer that we're carrying on. The Hang Seng is up around 400 points, and Italy, after a lot of uncertainty, has opened up % higher on that one as well.
Oh, yes, absolutely. And you know, in the Midcap space, I think perhaps the market is not in a mood to sort of reward any of the stocks. Right. Because if you look at the stocks that are actually falling, I mean, Dilip Bilkon, Vakrangi, the market is not charitable at all. PC Jewelers, Suzlon, Federal Bank, all these stocks are under a lot of pressure. But you want to take us through the headlines? Oh,
yes. First up, the top headlines. Then, relief rally on Dalal Street ahead of futures and options expiry today. HDFC Bank, Infosys and ONGC prop the Nifty today. Banks outperform, but mid-caps take a beating on continued risk aversion.
Crude prices surge again. The Brent crude prices are now near about $77.50 a barrel after reports that the OPEC will stick to the production cut agreement. Bond yields jump and the rupee falls.
Second day of gains for HDFC Bank after a roaring rise in the ADR overnight. Street expects aggressive buying in the stock once SEBI discontinues FII trading window for equities from the 1st of July.
And all eyes now on the fourth quarter GDP numbers due later today. A good Rabi crop, the uptick in manufacturing and the low base could add to the growth. A CNBC TV18 poll estimates an improvement of 200 basis points to 7.4% versus 7.2% in the previous quarter.
And in four biggest buy polls, BJP facing uphill battle to avoid another UP buy poll setback. BJP ahead in Palghar, Shiv Sena and BVA fight for second place. Voter ID scam fails to dent Congress chances. The Congress is set for a thumping win in RR Nagar. Okay, moving on. Ashwini Gujral of ashwinigujral.com joins us now with his top technical picks. Ashwini, thank you so much for joining us. Good afternoon. The Nifty is up around 0.5%, but how do you sense the market would end today given it is expiry, and what are your top picks right now?
See, we are slowly heading towards the higher of the end of the range, which is about 10,700, 710. So my sense is that this does not look like the market that's ready to break out. So maybe at higher levels, closer to 10,700 odd, you would possibly see some profit booking. But the interesting index is the IT index, which for last many days was in a narrow range. Today seems to have broken out. So while financials may give back gains, I think it's IT index which could close stronger. So that way, getting into the IT index is a better trade. Overall, Nifty, Bank Nifty, still fairly range bound. Having said that, individual stocks, IndusInd Bank is a buy with a stop of 1900, target of 1950. ICICI Lombard is a buy with a stop of 760, target of 790. And Escorts is a sell with a stop of 940, target of 900.
Okay, well, the Bank Nifty is now picking up quite a bit of pace, actually. It's at the high point, up about 1%. Ashwini, hi, afternoon. You spoke about IndusInd Bank. What about Kotak? That stock is, hitting new highs day after day. In fact, it's gone from 1,000 to 1,300 in less than 6 months. Is there more upside there?
So it's clear that, money moving out of PSU banks and ICICI Bank, etc., are moving into Kotak. So that's kind of making fresh highs. And overall, there should be many more new highs, 1,500, 1,600 on Kotak. So all declines there on IndusInd Bank and HDFC Bank should be bought into. The rest of the banks will have, trading rallies and trading declines. Nothing much will come out of them.
Okay, Ashwini, thank you so much for joining us with that perspective. But moving on then, Udyan Mukherjee caught up with Edward Evans of Ashmore Investment Management as part of a special series, London Eye, and began by asking him why foreign flows into India have been low and what are the factors actually clouding the India picture now.
In the very recent term, India's been impacted by global challenges. Let's put that down as sort of concerns over the sustainability of global liquidity in US dollars, and at which is sort of very much piqued investor concerns. And that has impacted India because India has a current account deficit of around about 2%, and of course higher energy prices are putting pressure on your current account deficit. So there's quite a focus by the market looking for areas of vulnerability. Of course, locally at a more domestic level in India as well, there's been some challenges, and these very structurally long-term positive reform measures are taking time to have their positive implications, ramifications. So I think over the very near term, India has seen the brunt of sort of volatility of flows. Let's not forget the Indian stock market was up, 38% last year. At least the MSCI India index in dollars. So I think some investors may have taken some profits while they then look to readjust their positioning.
But on earnings, are you happy with what's come out of India? Because there seems to be an air of disenchantment if you look at aggregate earnings. In 2017, India did not quite deliver as much as some of its other EM counterparts.
Yes. Expectations for earnings in India in 2018 are the highest it's been for several years. And what's driven that is expectations in the banking sector. I think it's fair. There is, investors want to see the structural changes implemented in India having a positive ramifications, so expectations are strong, and I think one will need to be selective within, as you would in any country, within those earnings expectations.
How do you read the banking sector in India? Because the corporate banks still seem to be struggling. There's a lot of news flow about scams coming out of the public or the state-owned banks. Where do you stand with Indian banks relative to other EM financials?
Yeah, India's got some very high quality, more private orientated banks which continue to grow from strength to strength and take advantage of many of the positive hallmarks of a growing emerging market country with great demographics. The public side clearly is going through a period of change. The bank recapitalisation is certainly helping. But still, again, one needs to be selective within that. I think overall one could point to the banking sector in India as having stabilised its pool of poor loans. I think as the economy is recovering, which it is, that will also make the NPLs and non-performing loans a less important part of the focus of the market as economic growth is recovering. And of course, things like the bankruptcy protocol process, which is currently being worked through, that is also, I think, a net positive. So overall, it's quite a constructive view, but one needs to be wary that it will take time for these positives to really come out, and one needs to be selective between the banks.
Okay, remember you can catch that entire interview with Edward Evans tonight at 8:30 p.m. only on CNBC TV18.
Well, the Nifty is steady at around that 0.5% gain mark, but then there are a lot of stocks that are buzzing in trade. In fact, let's go across to Sonal, who's standing by to tell us some of those stocks. Sonal, over to you.
Thanks a lot for that, Anisha. Well, a lot of stocks are buzzing in trade today. I'll start the ones which are actually buzzing because of their earnings, starting with Leel Electricals. The stock is down in trade today because they reported a loss of 245 crores versus a profit last quarter. There is an exceptional loss of 300 crores, but even the revenues, they have gone down by 62%. Suzlon also, weak set of numbers. The revenue has gone down by 55%, and loss is reported 470 crores versus a profit of 588 crores last year. Deepak Fertilizers, another weak set of numbers. EBITDA has gone down by 34% due to higher costs, and because of which the margins have contracted by 540 basis points. The profits have risen, but that is majorly on account of higher other income. V-Guard, another weak set of numbers. Operating profit margins have gone down by 330 basis points due to higher costs. Profits also have gone down by 30% because of this. Punj Lloyd, that company has reported profits after many quarters at 944 crores versus a loss, but that is majorly aided by a tax rebate of 1,200 crore rupees. But let's move on to the brokerages. Some of the stocks are cheering the brokerage calls and made on them. Coal India, CLSA has revised the target on the company from 335 to 360 and have also upgraded the stock. That's why the stock is up in trade. trade today. ONGC, though the Q4 performance was operationally weak, CLSA believes that the higher crude prices will be something that will aid the earnings of the company, and that is why they have increased the target from 225 to 240 rupees for the company. Atlanta is another stock that is in focus because their auditor PwC has resigned and is down now 20%. But apart from that, some stocks that are buzzing is City Union Bank, Orient Cement, Capacite Infra and Torrent Pharma. All these stocks are buzzing in trade today. Okay, thanks a lot for that, Sonal. Well, moving on, the ambitious mega merger between the three state-owned general insurance companies was announced in the union budget this year. CNBC TV18's Jude Sanith caught up with M.N. Sharma, the chairman and managing director of United India Insurance, to get an update on the timeline of the planned merger. Listen in.
This year, it will definitely happen. It's not a zero, nowhere zero, and it will happen. And RFP is a very, very crucial and important document, and the significance of it, all of us know. And tomorrow, when we are selecting an agency to carry out the activities and to as the consultant to guide us and do that, so the terms of reference need to be thorough and very clear. So it is in that process only we are trying to draft that and complete it. And once that is done, the selection of the consultant will be a matter of within a month. It will all happen.
All right.
Once that is happened and the consultant is in place, the rest of the steps will be quite easy and automatic.
All right. So 2 quarters then? Can we assume 2 quarters?
Maybe in 3 quarters.
In 3 quarters.
Maybe before 31st March 19. It should be done.
But before the end of the fiscal year, for sure.
I believe so.
All
definitely.
Right. Before we end, I have to ask you the million-dollar question. What kind of an indication in terms of valuation will the merged entity have? Do you think 1 lakh crore would be a reasonable valuation of the merged entity, 3 PSUs?
I don't think it's going to be a 1 lakh crore entity. The merger of these 3 companies, in terms of gross premium, will be doing about 45,000 crores roughly. About 45,000 crores premium will be underwriting, and this will be the largest non-life insurance company in the country. The current largest company being New India, and this year they have done 26,000 crores. And this company, based on the current figures itself, if you have merged, it will be about 45,000 crores. So that is in terms of the premium underwritten. Well, in terms of the net worth of these companies, it's going to be about 30 to 35,000 crores.
All right. So
net worth of these 3 companies together.
So before March 31st next year, that's the date that you're expecting?
I expect this to be completed before 31st March, because the government is very keen and they're trying their best to push all of us to do that, and I'm sure we'll all be able to achieve.
But the Midcap index is not shaping up any better. In fact, it's getting worse now. Just take a look at some of these stocks. Jet Airways is plummeting to new lows. It's now down, I think, about 2.5% or so. Jet Airways is also facing a lot of trouble as far as the balance sheet is concerned. The auditors have raised concerns several times in the past. So, these are a couple of stocks that are facing the heat from the auditors. So keep an eye out on them. But Infibeam is the stock on our radar right now after the company reported its Q4 numbers. It's been a strong year for the company on the whole. So as you can see, Q4 was also good. The revenues doubling on a year-on-year basis. Vishal Mehta, the MD of Infibeam, joins us now. Vishal, good afternoon. I want to first start by asking you about this recent acquisition. You acquired the company Unicommerce from Snapdeal. What does this bring to the table for the company, and what kind of growth do you see for Unicommerce over the next few years?
Sure. So Unicommerce provides cloud-based warehouse management solutions. You see, post GST, that anyone who wants to operate a warehouse in different cities, earlier you could actually operate a single warehouse and cater to all over India through clearing and forwarding agents. But post GST, that all the brands have started building out warehouses closer to where the customers are. And Unicommerce traditionally has been providing these warehouse management solutions, which means that how do you operate the warehouse in terms of inbounding the product, procuring the product, ensuring that you can ship the product, invoice the product, and also allow these same products to be enabled across multiple marketplaces. So theoretically, any store can become a warehouse. Any store which is closest to the customer can become the warehouse. They provide these services to some of the largest e-commerce players. In specific, you would see the likes of Myntra, Lenskart, many of the larger companies, as well as many small brands that are about 10,000 plus sellers. they essentially utilize Unicommerce solutions. And, this particular acquisition gives us an opportunity to provide a completely integrated solution to the merchant, because earlier we were providing the web mobile solutions, we were providing payment solutions, and we were also giving some logistics, but we were not providing warehousing solutions.
Sure. How much, just two quick questions on this. How much have you paid for Unicommerce, and how have you funded it?
The total transaction size is up to 120 crores. And if you look at Unicommerce progress, in the past so many years, they process about close to 100 million transactions a year. And there are about 10,000 plus sellers on the platform. The funding has been done using, convertible debentures. So in other words, the shareholders of Unicommerce will get convertible debentures of Infibeam.
Right, Vishal. Taking that point forward, you have been making a lot of acquisitions like Unicommerce as well as another company in Dubai. You've also taken an enabling resolution to raise around 2,000 crores. What is this fund for? Would you look to acquire more such companies?
Sure. So yes, you're right. Traditionally, we have been, looking at some good opportunities, Unicommerce being one of them. We acquired a payments company in UAE. Digital payments has become core to us. In India itself, we process 21,000 crores of transactions every year. And that is where we record a small portion of the transaction as our revenue. And the value proposition in India is very strong. We wanted to bring that value proposition also to the Middle East market. So we acquired a company called Bavian International. They process on a run rate basis about 1 million transactions a year worth 1 billion dirhams.
So Vishal, any more such acquisitions that are lined up? And this 2,000 crores, when are you looking to raise that, and what will you use it for?
Sure. So the resolution is it's an enabling resolution for us. Today, the company is cash flow positive and profitable. And as more and more opportunities come up our way, that we will be able to make sure that we can drive our growth. So as a result, the amounts that you see and the value of that opportunity is of an enabling nature for us.
Okay, and what is the debt on the books of Infibeam currently, and what is the expectation, the trajectory over the next 1 year?
So if you look at the debt is minimal on our books. Today it is sub 50 crores. We had taken debt to acquire CC Avenue. So if you see FY17, our numbers, we had about close to 150 crores of debt. But as we became profitable, we paid out most of the debt. So today the number will be closer to 50. It's less sub 50 crores.
Okay. So can you just give us an outlook on what, the revenue growth, services and the product revenue growth could be over the next 1 year? And how are you battling competition?
Sure. So services has been very strong. We have been growing upwards of 200% year over year. Services is about 70% of our revenues at the moment. That's the business where we operate with very high EBITDA margins because we collect commissions, and a majority of the transaction-based revenues come in commissions. So as a result, you see that our services revenue, year over year has scaled significantly. It's upwards of 500 crores.
But Vishal, will that run rate continue is the question going forward? A 90% growth rate year on year, 500% growth that you're mentioning in one of the segments, will that continue?
Yes. The important part is that you see last quarter alone we processed 7,000 crores of transactions, and full year in FY17 we had 12,000 crores. Even quarter over quarter, if you see in Q3 versus Q4, in Q3 that number was 5,000 odd crores. Now it's 7,000 crores. So as digital transactions keep on growing, as we keep on adding some marquee clients, as we allow more and more services to come online, we've recently picked up government e-marketplace as well as an important opportunity, whereby the entire central government procurement is going through GEM. And in that, we earn a cut of the transaction. It's a small cut of the transaction. So today, less than 5% of the overall opportunity is online in GEM. We believe that the upside is significant given that this digital economy, digital currency, as well as e-commerce is picking up. So we believe it's a very, we are still at the beginning phases. The recent acquisition that we've made in international market, that itself is $1 billion, which was not there last year.
So through this GEM program with the union government, what kind of orders have you transacted so far? I mean, what is the quantum been and what is the opportunity looking like?
Sure. So the numbers are published online on GEM, on gem.gov.in. All the statistics as well as specifics about number of merchants are also communicated. GEM did upwards of 8,000 crores of transaction value, and they had 462,340 orders that they have reported. These numbers are as of May 30th. Okay. And there are more than 110,000 service providers, which means fully KYC'd merchants who want to sell to GEM. Okay. So as a result, it is an opportunity to bring a lot of transparency in terms of the purchase. And as a result, I think one of the things that we believe in is that it becomes an opportunity because more than 20 states have also signed up to procure from GEM. So since we had launched in September and it's in the beginning phases, that we believe that is a big opportunity. The other big opportunity that I should also highlight is Bharat Bill Pay, which is the utility payments. So until today, we were not communicating a lot of processing volumes on utility payments. And RBI has opened up Bharat Bill Pay as a switch.
So how much could be the, we're running out of time. I just want to get one last number from you. How much could be the annual revenues you earn in the form of commission on the sales for the GEM projects, about 500-600 crores or more?
We don't segment out GEM specifically as part of our service revenue. GEM today is of course small, but it's reasonable to assume that we will make,
Oops, okay, I think we snapped that line. All right, Vishal, thank you for stopping by. We've in any case run out of time. That's Infibeam. They're saying that, they do have positives going in from a lot of government contracts. But with that, it's curtains down on Midcap Radar. Thanks for watching. Your stock's up next.